John Lothian News wants you to be safe and for us to be able to return to being with one another again. To get there, we need to do the following to beat this pandemic. Wear a mask, stay 6 feet apart, wash your hands for 20 seconds at a time, and self-monitor your temperature. Stay safe, stay smart.
We had this guy in-house named Larry, and Larry, since probably 2012, 13, was talking about mining Bitcoin, and it was really this very, weird little thing, super interesting, but not more interesting than like Magic the Gathering and how much people were selling some of those cards for it. Seemed interesting, but he'd always, blab about it, and he became very successful, from mining Bitcoin. But we looked at it later on at IMC. So in 2017, we put a team together to look at it. One of the big struggles in cryptocurrency is you have this fragmented marketplace, which is really interesting. However, the exchange matching engines are mostly in the cloud. There's really big latency. There's not a lot of visibility over how this all works. And when our developers were looking at it, they just said, this is not we don't know how to write to these APIs. They're not very professional. There's no documentation. The market was still relatively small at that point. We pulled people away from really profitable desks that needed resources. So we ultimately scrapped it. But I had been very interested, from then on in cryptocurrencies. Through one of the owners of IMC, a guy named Week Pot, who's a former Goldman partner, he knew a guy named Dan Moorhead, who runs Pantera, which is, anybody in crypto knows that Pantera is, one of the biggest investors in the space. And we had him come talk to our management team in early 2017. And I vividly remember kind of at that point, he's telling us like, oh, this thing's going to the moon. Pretty much convinced us that there's a ton of disruptive upside potential. Certainly convinced me, but it was really difficult because you're looking at this price chart of what's happened over the past few years, and you can zoom in on any point of Bitcoin since inception over the past 10, 11 years. And at any point, it looks like some bubble, right? There's been so many points where this thing goes up 10x in a short amount of time. So, once you see what happens, it's easy to look back and say, man, I wish I had bought. But at this time anyways, I'm looking at Bitcoin at like $3,000 saying, this might be the top. It's probably too late, but what the hell? So later on, I get together with a couple guys from the industry trying to figure out how can we make money in this space. We're looking at maybe starting an exchange, right? That's where the money is at that point. Exchanges are charging 50 basis points or more. They're getting billions of dollars through their pipes. This is late 2017. We're looking at this. We're saying, man, if we can just build a simple matching engine, we in theory can make $1 million a day doing this. It's going to be super easy. I start talking to more people in the space, and everybody's got this idea. The bubble kind of quickly bursts at that point. There's this real period of like weeks. You measure this in weeks, not months, really, in late 2017, early 2018. And it's just this frenzy of retail activity that ultimately kind of died out. And I'm thinking to myself, okay, how can we really add value to the space? We don't need another exchange. The running joke in the options industry had been like, how many exchanges are we going to have a year from now? And, anybody listening to this knows that every year there's a new options exchange, and they did that. I think back to, what was the whole point of like the Buttonwood Agreement, right? It was to get everybody in one place. That's how you get maximum price liquidity, is get all buyers and sellers in one place. So, everybody's complaining that the Bitcoin market's not liquid. You've got an SEC who doesn't want to approve an ETF because the market's not liquid enough. Well, the reality is Bitcoin is super liquid. A lot of these cryptocurrencies are super liquid, but they're just very fragmented. And you don't have anything like Reg NMS that kind of ties, the prices together. So I'm thinking about all this, thinking about how can we add value. And I said, well, why don't we build a platform that can connect all these exchanges, similar to what we did with options order routing, trying to deliver best execution to a customer who can come to one endpoint and get access to the best price or better. I mean, that was my dream, right? Let's get a better price than Coinbase or Kraken or Bitstamp or any of these exchanges can offer. And I really believe that that's kind of where things are going. So right now, over the past 2 years, I've been spending time building up Cove Markets. We have a best execution platform, connects to a bunch of the leading venues, provides all these kind of algos and analytics, things that probably in traditional markets people can get from interactive brokers. But right now in crypto, honestly, most of these exchanges are really, I would say, like websites that are just kind of calling themselves exchanges, but they're just these websites you go to that show a little bit of transparency into the market. Certainly no promise that you're going to get a good price, no idea where the market is. We're just trying to change and professionalize that, taking the knowledge of 20 plus years in traditional financial markets and kind of trying to speed that up for crypto. We're doing two different things. One is I've been writing a lot of blogs and getting a lot of stuff out there that's driving literally. Yesterday we had, for example, 6,000 visitors to our website that were driven entirely by organic search traffic. So we are trying to target what things are people searching for when they're trying to find out about, crypto best price or Bitcoin low fees or whatever it might be, and making sure that they end up, at our website. So that's one part of it. So we are getting a lot of our signups, and we've got, several hundred accounts right now. A lot of those are people I've never met. I don't know anything about. I can see an email in our account list, but I don't know much more beyond that. I can try to engage with them over email, but I don't see them face to face. The other part of this is, I'm hitting up, my network of, traders. So there's so many people that you mentioned earlier, people who maybe stopped being able to make money in, the option market in 2010, 11, because, the professionals kind of squeezed them out. A lot of those people have been looking at crypto because they see huge edge. You see exchanges. I saw this weekend exchanges, big exchanges, as the market was moving, were 500 in Bitcoin, were $500 apart, $1,000 apart at times. Now that's certainly unusual when the market's kind of quiet, but when Bitcoin is moving, up or down 10% in a day, these things get really out of whack. It's really amazing. So people are making money in that space, but the big problem they have is if they have a Coinbase account, they've got, 8% of the market, at most. If they get a Kraken account, they get another 7 or 8%. If they get Gemini, a few percent. So in order to actually connect to the market, you've got to open up multiple different accounts. When I started trading crypto just personally years ago, I opened up Coinbase, Kraken, Gemini, Bittrex, and it was a pain in the butt. That was the motivation for me to build, this Cove Trader, was to be one point that somebody could come to. They could see all the market data in one order book. They could see all the trades in one list. They could send an order using, kind of our best price algorithm and get their order sent to whoever has the best price. So a lot of former floor traders, a lot of former traders have been very interested in this. Honestly, things I didn't even think about. We have, I was talking to one of the bigger exchanges, their compliance group is using Cove Trader right now. Sorry, not their compliance, their business development group is using Cove Trader to try to see how often are they at the best price, how liquid are their markets compared to some of the competitors. And that's information, they're able to see. We'll look into the order book for $100,000 worth of liquidity or $1 million worth of liquidity, say, well, how wide is your market at that point, and try to compare the different exchanges. There's a lot of cool things like that. We are trying to respond to what people say that they need. So one example is people send big orders into one exchange and they create, these long wicks. So if you look at one of these candlestick charts, crypto has a lot of long wicks. You see a long stick up or down that doesn't really reflect where the market's actually trading. Every single time this happens, it's somebody sending in too much size for an order book. Now, sometimes that happens on a super liquid exchange during normal kind of hours on a Coinbase or Kraken because somebody had tried to just dump $1 million at once when he would have been better off using a TWAP or breaking it up into smaller pieces or routing it to different exchanges. But sometimes they'll send even just a small order to an exchange of, $30,000 can be enough to move the market 0.5% or 1%. One thing people should note is if the market has just moved a lot, for the next half hour or so, the market can be very illiquid. You can see market makers fade and pull their quotes. There's no quoting obligations. People have no incentive to provide passive liquidity. Imagine you're a market maker sitting out there, right? And you just got run over and you're trying to collect, 0.25%, maybe an edge, and you get run over for 5%. You're not sure what's going on. You're going to step out of the market for quoting for maybe 5 minutes, 30 minutes, and just let things kind of settle down. And the problem there is the liquidity that somebody might have seen an hour ago has gone down, tenfold. So we're trying to make people kind of aware of that, trying to stop people from creating long wicks. We created an order type we call a bounded market order that is similar to a market order, but it just makes sure you're not going to execute farther away than a certain predetermined percentage. We are developing other algos that let somebody, sit at the top of the book. So one big thing with crypto is the pricing disparity. Much like equities or equity options, you pay more to be a taker than to be a maker. Well, it's very hard to be a maker in Bitcoin because there's no minimum tick size really. So if you put a bid in there, somebody can always dime you by a penny or whatever, some infinitesimal amount. So we've built a top of the book algo to keep you there, much like a market maker would, so you don't have to cross the spread. So we're listening to what people say they want. We're giving them a front end that's better than what they can get from Coinbase or Kraken or elsewhere. Eventually later this year, we are planning to be able to host accounts directly. So right now, somebody needs to connect their exchange accounts, which is really easy. So you can go to, if you have an account at Coinbase, you can just create an API key, copy paste it into Cove Trader, and trade through your Coinbase account, but through our front end. We never touch funds or have access to funds, but you can trade through all the accounts just through one software front end. But a lot of people have said they would like the ability to really just deposit money to us and get all the liquidity from all the exchanges and all the over-the-counter market participants being able to go straight to some of the market makers, maybe not have to pay high exchange fees and be able to do a quicker settlement process with the funds. At this point, I could care less about charging people or making money for the product. The biggest goal right now is to build a platform that people want to use. Now, whether that's introducing a premium model that people pay for or something else, that's totally fine. But step one is just create a platform that people love to use. And right now, I think judging by the numbers and the account signups and the feedback we get, we're doing a good job at that. But obviously, as you scale and become bigger, you've got to make sure that customer service is still super responsive, that you're getting back to people, within an hour. That's still easy enough for us to do, but that's going to get harder, and we need to keep customer service going well. And we need to keep building features that people want. So we're still hiring software developers. We have a team of 6. There's only so much that you can build, every week with a team of 6. So we continue to hire and grow. I do not think the space is going anywhere. In the time that we got into crypto, we've seen Bitcoin go from above 10,000 down to 3,000, back up, back down, now 30,000. So I think the big story of 2020 was all the institutional investors coming in, people that previously were kind of staying away. And before it was really just a retail boom bust, maybe, would look no different than Beanie Babies or something like that. But now you've got like the real big money is coming into the space. I don't think they're going anywhere. Everybody knows what they want. Everybody knows that fees will go to zero. people will demand best execution. It's hard trying to convince somebody sometimes when they've just tripled their money in the past month that they need to care about, saving 20, 30 basis points. But I'm also able to show people that, hey, if I could save you 10 basis points on every trade, that's going to be, for you as an institutional guy, that's going to add up to $1 million a year. As a retail guy, we're talking thousands of dollars, adding up from saving 10, 20 basis points. You look at, right now I'm choosing personally, like which ETFs do I want to invest in, right? Just to get exposure to the stock market. And I find myself comparing like SPY to IVV and looking at an expense ratio of like 0.09% to 0.07%. And then I'm doing the math saying, what the hell's the difference? This is so low. And then I turn and I look at crypto, and it's just people are leaving so much money on the table. And that's, I'm active on Twitter, both through my personal handle and through the Cove Markets one. And I'm trying to show people these examples of this guy just gave up $1,500 on this trade. This guy gave up 20 grand on this trade. But for every one of those, there's people giving up $50 here, $100 there, $7 here. It's just too much. And I think as the easy money starts to disappear and people stop worrying about doubling their money, they're going to start focusing on, just execution cost and saving money. It's been the story of every market on earth has gone that direction. I think that's the way things are going to go here, and just, making their life easier at the end of the day and giving them tools that they want. My biggest worry that I had in my career by 2010, 11, 12 was, I read books like Dark Pools. Scott Patterson wrote these great books, Dark Pools, and he had another great one that I read, The Quants. And they talk about this transformation, the path to electronic trading. And a lot of that I missed, the equities markets, all this transformed, and I'm reading about the sauce bandits or whatever it was, and all the cool stuff happened. I was so lucky to get into options, like the last market, and the SPX, kind of the last things that kind of changed from primarily floor to screen trading. So I thought, of course, I'm going to tell my son that I was down there and it was the wild, wild west. I won't tell him about the group hugs or whatever and the, all the softies down on the floor when I was there. I'll tell him it was really like, the 80s and everything like that. But I do have a great story to tell, which is that path to electronic trading. But as I started looking forward, a lot of what we spent time on as a trading business was ultra low latency technology, which is super, super interesting. And we were talking about like machine learning and the quantitative side of it. And it just kind of felt like a bit of over optimization. People ask, how fast do markets need to be? And I can certainly tell a great story about how efficient markets became during the time that I spent trading. And then it gets to a certain point and you say, well, when we're talking about nanoseconds and when we're talking about some of these other things, maybe market structure needs to change or evolve a little bit more so that we're not having to dump millions and millions of dollars into that side of the business. What's been rewarding about cryptocurrency is it's not at all about that. It's just about finding the best price. It's about kind of bare bones connectivity. It's going back to, I think, how the market used to be. And I think with cryptocurrencies, you mentioned decentralized exchanges, there is so much potential to transform the market. And I think, if you're doing a job where the market's not evolving, and if you're not worried about maybe your job or your business line won't exist 5 or 10 years from now, then you're probably also not in the right space. You're in a very just kind of boring space. I don't know how you get excited about the future. And the nice thing about cryptocurrency is there's a ton of uncertainty, but I'm swinging for the fences. And my bet is that this will be around in 10 years. If it is, it's going to be huge. If it goes away, I'm totally fine with that. I think we're a little past the point of no return. I think we've kind of crossed that event horizon where there's too many people involved. There's too much at stake. There's too many smart people. There's too much smart money. And I'm just really happy to be in a space where I'm learning things, every single day. That's been a lot of fun.